Hello, investors. Hopefully, you're doing well. In today's video, I'd like to answer one of the common questions: is how to invest your first $1,000. So I put the $1,000 in green because now you have a green dollars, and you have saved, and that's your first $1,000. Congratulations on saving your first $1,000. Okay. So before I'll go and tell you how should you invest, right? Not spend. So that's I like to congratulate you on doing that, and it's such a big thing to have your saving after tax money, and you have in your pockets, and now you are ready to invest it. But before I do that, I like to introduce you quickly myself. Myself is Pramod Kumar. I am a CFA charter holder and FRM certified, and I have on my website riseanalytics.ca as well. Here in my channel, I'm not trying to sell anything, or I just put my opinion and trying to value stocks and from the long-term investment perspectives. But I also put some educational content from the beginners as well. Okay, so that's about me. And if you like the content, you can check on the channel and some videos. You can kindly do like them and subscribe. If you like this video, I please give a thumbs up as well. Okay, so enough about me. So let's get started. Now, I don't know because it's a broad audience. So let me think this. So first, rule one: depend upon whatever age you are. If you have $1,000 in saving and ready to invest, I assume you'd have zero debt. I'm not saying any mortgage or any other, but at least the credit card, student loan, and those kind of a high interest debt. If you still have that debt, first I'll request you to please go and pay off that debt, because that's a killing interest rates on those debts, and that's no for me. Once you don't have any debt, those unhealthy debts, then for those now, since I don't know, so I'll put you in two buckets. So first one is the students, right, who freshly comes from school. They pay off their, hopefully, the student debt, and now they have some money to invest, right? The other category which I will take, which are the mature, the people who is still working as a hard earned money, and I'll come on that one, and then on that scenario. For the students, if you're the student, if I'm in your place, if I have that money at that time, that $1,000 after paying my student loan, I don't go on stocks. Yes, I don't invest in stocks. What I'm trying to say is I'll still invest in the stock markets, but not in the individual stock, because because you won't get the diversification, the benefit, and your amount is too low. So for that reason, I'll suggest you to do the ETFs, right? So either the S&P broad-based index or dividend ETFs, or you can also go for the technology ETFs, right? But not any individual stock, if you want my opinion. Why? Because first, it will give you, the ETFs is a broad basket. It will give you the diversification benefit. Plus, it's the low cost as well. So I have some ETF series, if you want, which is a low cost, very good historically, which I did. Some of them I personally has invested as well. So, and give the very good return. At least even if you just go and blindly invest in S&P 500 ETFs, I don't recall the ticker name, it can also give an average 10% return, which is a very good. But historically, but recently we have seen, but overall in the long term you'll do well. So that's for the students, or who are freshly saved that or entered to the new job market. Okay. The second category, kind of a people who are like a mature people. So mature means they've been out of school for a long time, and maybe any kind of circumstances. Maybe let's take the pretty mature, right? Let's say the people like 40 years of age. Okay, so now they are in mid category, but still it's not bad because they have 25 years to retirement, right? But now they have already spent so many years, maybe because of you immigrant to certain countries, XYZ, health, and any reason. But I'll still congratulate that you are doing the right, that you have saved your first $1,000. So here, I just now in here, if you're 40 and you say I'm not sure, because your profile, right? If you're very conservative, right, that you don't want to lose your money, and because here what I'm suggesting this only not from the any trading perspective, but from the long term perspective, when you retire, right, like say 20 25 years from now, when you are at 65 age, right, what you should be doing and what I will be doing if I'm in your shoes. Basically, that's my opinion, and kindly don't take as official advice. So this is what I was doing it. If you like it, take it. If you you can give a thumbs up, and if you don't, please follow, take your financial official advisor. This is just for the questions I'd like to answer. What if I am in that category? If I'm very conservative profile, like I don't want to lose, then there is no such option. Like I'll go for like GIC and all those. Pretty much very bad. Why? Because the interest rate we know is very low, and you can't even make the inflation. Little bit better is there are certain treasury bonds, right, or the government bonds, which is backed by the government. You can go on that one, right, or tips. At least it's give the inflation protections. But I still suggest go for certain ETFs as well. Again, no stocks for you. Why? Because again, the money is very low, and it's not give you the diversification benefit. Most of the it's a little bit more risky for your profile. Again, in that one, I'll suggest go for the broad bet index or dividend ones. If I'm in your place, I'll do that. But here I'll have one more suggestion. Rather than blindly go for the $1,000, what I suggest is, first, if you have a kids or you're married or even yourself alone, maybe you can take $50 or certain dollars. Just go and enjoy, but only for limited amount of money, not much, and enjoy the moment of celebration. Believe me, you will thank me for that, because the money you enjoy now, even if you have, let's say, your after 20-25 years, you never know, right, the life you will have $1 million, but the money you enjoyed at the moment, you will still remember your first $1,000 enjoyment. But don't get carried away, so and enjoy and expense the whole $1,000. Next things, what I like to do, basically, we have in the market, we say we have many assets, right? We have stocks, bonds, and alternate assets, and so on, XYZ, right? And but because of the low money saving, I can sense that for sure your income must be low. If your income is low, the main target is how to increase that bar, right? If we can increase that bar to the higher level, this means we have more saving in the futures. And honestly, investing like $1,000 doesn't make a big difference in the short term. So what you can do to increase your income, maybe leave your primary job as it is, right? But do certain courses. Here the courses are not like any XYZ webinar or something. No, professional courses, right? Maybe some kind of a programming, or sorry about that, some kind which give you the hike in terms of your salary, the job up, or anything which can give you some extra income which you can do after hours, right, or weekends, which will give an increase up, right? So those kind of should not be more than $200-300, or let's say five, right? Don't spend too much of money on that, but do something and try to study and increase your base income. So that's what my thought is. When you invest in yourself, because you are your asset as well. Think from that perspective. Take care of yourself, right? Not from so education is one. Believe me, it will pay off in the long term. Like for me, I did a CFA and FRM. Even if you want, you can try. At least the FRM you can try, right? It's a little bit more mathematical, takes a longer time. Or any other, like if you are in Canada, there are Canadian CSC courses are there, or any other courses. Depend upon your investment. These are financial, but what I'm trying to do more certification or these kind of courses which have certain good job market, or at least some XYZ courses which you can work off hours, right? So that's what my suggestion to you. But so think from yourself as the asset as well, right? Otherwise, invest the money for sure, if you can do in the ETFs and dividends, and those are healthy and at least give you the long term 10 years. So that's what the few cents from me. And if you still like it, kindly give a thumbs up to this video and subscribe to my channel. And if you have like those kind of beginners questions, I know when I was in that spot, and it takes times to come and reach here. So let's work together to make our money work hard for us, and so when we retire we'll have a good community and relaxing, who can enjoy and peace and happiness at the same time. Because I remember people say happiness is the thing, if you share it, it multiplies, right? So that's what my thought is. Okay, so thanks. I don't want to make this video too long. Hopefully you like this video. Give a thumbs up and subscribe if you like. Okay, bye for now.